Hi, everyone. How you doing, Hugo, Mary? Let me say hello to everyone. Ryan's in the house.
Morning, mate.
Asking people how it's hanging. And it looks like precious metal bears are.
A little to the left.
Yeah.
Okay.
No, I'm just saying, look, there's some new people here. Komoto, Jerry, relax, came in. And we have time to talk about how to make $1 million this morning. Right. So here's how we do it. All right. I'm going to share the screen, and we're going to do it by listening to you and Ryan. Tell us how to do it. So there we go. Can you see the screen?
Yeah, it's easy.
Okay. All right. So anyway, Blake was joking or half serious with Stel yesterday, saying that, this could end up being a false breakdown in silver, threatening to become that. So,
wait. Good morning, Dale. I just need to interrupt really quick. When I half joke about things, I'm only half joking about the bald jokes. Everything else.
Okay.
Is real.
All right. This was real.
Just
what Blake said yesterday, and it could be manifesting. And not a bad move in gold. It held the previous low on that pullback. I mean, what really could be red, green yesterday? Gold did it by a few bucks, and bonds. That was it. I don't know what else was green. Even oil came off. So, what a day yesterday, and probably some people trying to, buy double bottom here.
Catch the knife.
Here, yeah. Maybe get a rally before it takes it out. But God, what a lot of damage done. And, I heard a guy, and he's, that guy, Steve Grasso, who's on CNBC, is really not an alarmist. But he's saying the way stocks are behaving with these huge gaps, and, the magnitude of the moves, that he thinks the market is broken, that it's really not functioning the way it should. Because it's mispricing all this stuff. So do you think the market's broken or just the longs are broken, guys?
It's just volatility. It's just volatility, in my opinion.
Okay. Because, we have seen...
broken yet? Nothing. It's not.
Go ahead.
It's not like 1987 or 2000. Somebody was indeed saying 2000, 2001 with the early fintech crisis. Amazon dropped like 90% before rebounding. We are nowhere near stuff like that, right?
Yeah, it's kind of the way it's doing it with like a heart attack without, what a real strange duck for me. And I bet a lot of market participants is with all of this carnage, the fact that the VIX is only at 31. And, we're a lot lower in the market than we were up here when the VIX was 36. So what does that mean? Does that mean that it's orderly and it's actually bearish because there is no panic, so the market could continue to wipe out market cap, but it's orderly so you don't get a spike in VIX? Any ideas on that, Blake?
I think you're spot on, Dale.
I mean, it's a strange duck, this go round in VIX.
Yeah.
I would have thought it'd been a lot higher.
What volatility? You know what? I'm sorry. I'm kind of we're having a little conversation in the ForexAnalytix chat room about cryptos and and everything else. But which we can talk about here in a second. But just looking at volatility, I mean. It can't bust out, and the S&Ps hit actually new lows. I was surprised. I told everybody in the chat room this morning about an hour ago. When I got up and I saw the S&P trading below 3,900, I was actually surprised because the dollar was really weak last night.
That's another feature of today. Yeah.
I mean, we had the Aussie bounce back, the Euros back above 105 pretty solidly. And when I got up this morning, I was like, wow, the S&P's got to be higher. And then when I sat down to see that it's lower, I'm surprised. And then just as you're pointing out here, another surprise to me was, okay, we're lower in the S&P, yet the VIX hasn't broken out.
Yeah.
I mean, so I don't know. It's great to point that out, Dale.
Yeah, because a lot of people, myself included, would say, well, you know what, it's probably, it could be a break to buy because they really can't pop this VIX. But it's probably, when I thought about it for a while, it's probably more bearish, which means even though it seems disorderly, the market's orderly, or we'd already be at 40. This decline, right?
Yeah.
So
I think it has to do. I think it has to do with the liquidity still being in the system. So volatility, yes, but perhaps no panic yet. Although individuals can move a lot, like we have seen with Walmart and Target, but it's not disorderly yet.
Yeah.
No, I mean, if you look at FX vols at the moment, I look at the 1 month at the money vols. We've got dollar yen money at 11.62, cable 10.8%, euro dollar 9.0%. That's still, and this has been sitting like this for a couple of weeks now. But we're not, high vol, but it's not. Markets aren't really smashing anywhere majorly, but you're going to get these big swings because of that higher vol. I mean, look at dollar CAD, up, down, like a horse jaws, as they say in certain places.
This is where Ryan in the room got short. All right,
I was short for a bit, and then I messed it all up.
Okay. And Aussie, nice response. I mean, to me, it doesn't look as much. It looks more constructive that after this first wave, all we're doing is this. It's correcting overbought in time, not price. What do you think, Ryan?
Yeah, potentially. To me, it smells a bit dead cattish, that bounce. If you take it out a bit further, look at that move. Look at the weekly there. 1, 2, 3, 4, 5.
There you go. Yeah, look at that.
6 weeks down.
Yeah.
So does the bounce now look like it's turning the trend around, or does it just look a bit dead cattish?
Well, I guess you have to call this week neutral then, okay? Yeah. Because it was a negative. It was, and it's not Friday yet, but it is positive week, and we did come off the, took out the double bottom, and we're trading right back at it. So holding below that 70 level on a weekly basis or a longer basis, that changes it. It doesn't look so bullish, does it, when you compare it to the shorter time frames? Yeah.
Maybe the bigger players are waiting for the elections to be over.
Yeah.
Elections next weekend in Aussie land.
This weekend.
That's right. Yeah. Okay. So what? I had this. I drew this line in yen yesterday. Think we're going there? Looks like we're headed there. 26.5 or so.
Yeah, I mean, that's fairly much a level on its own. I think 26.5, 26.70, that sort of area. But
I was looking
the big
at
127 is first. Yeah.
Go ahead. 27. Yeah.
Yeah, 127 is the range. I'm probably going to have a little long into that if we see it, the low 127s, depending on what the driver is. But yeah, here you have yields hovering around 2.8.
Yeah, so if we,
I was going to say, hey Ryan, I've got good morning, guys, and I've got a bid around 126 because that's where that double top still targets down there. So
that's a good area.
Yeah.
Anyway.
All right. So anyway, yields also, with the yen. This is looking more and more like it was. I mean, you could draw just a kind of a neckline here when we get down there. So, if it is true and we do break down, I mean, you're talking 2.25, which really, if you go all the way back, it's probably just a normal retrace.
Yeah, there's a lot of arguments that yields cannot come off with what the Fed is doing, but markets having priced in a lot of it, it might not be the case that yields cannot come off at all. I would say it would be quite important if we go back down below 280, 275 on the 10s, because then there might be some pain to be taken before then we go back to what the Fed is doing, hiking rates and QT.
Yeah.
But it's relatively important here, I would say, around 280, 275 is quite important.
Very critical there.
Because
that opens the door for, like 240, 250 right here.
Mm-hmm.
So it opens the door for that, certainly. Maybe even 2.25, where you look like it might stall here. So, I mean, this isn't even the whole move. This is just a move from from late 21 to where we are now. And just to correct that, I mean, somewhere in the mid twos, I think would be normal, except you're right. The Fed's going to hike in June and July, and maybe the market's way ahead of the Fed.
Yeah, but quantitative tightening as well should be mechanically adding a little bit to the more longer term yields. But breaking back below would mean that the market isn't believing at all what the Fed is going to do, and they expect a recession or stagflation or whatever, and believe that the Fed will have to react the other way around already, which has already been brought up here by Stel and other people.
Yeah.
Yeah. The question, though, is sorry to interrupt. The question is, when will they do that? And you see all these people on the way up. People were saying, "Don't fight the Fed. Don't fight the Fed," when they're easing and they're providing liquidity. Now they're trying to fight the Fed, trying to buy the dips. It is so dangerous. And remember what I said yesterday, when at this time the markets were still kind of flattish. I said, I think rallies should be sold. And we had the rally the day before. And I said, yeah, I don't get it. As long as the Fed's tightening, as long as they're telling us they're going to keep doing 50s. And trust me, I don't think the market's really pricing much of QT yet. I think the market kind of doubts that they're going to go through with it, which I see the rationale. But until they actually turn around, you really don't want to get in the way. So I still think we selling rallies in equities is the right thing to do. I mean, yesterday was a disastrous day for equities. The Nasdaq was down 5%, and with yields rising, with the Fed tightening, my big picture.
The market fell with the yields falling. I mean, you don't think the market noticed that we went from 3% to 282 intraday? So it really wasn't rates yesterday. Well, it was
no.
Well, I mean,
you know what I mean?
What we traded yesterday, and I spoke about that with Blake late last night, or my late last night on the chat, is we were actually trading stage 1 of stagflation. You see the gold is doing better, but then you see rates having fear of a recession, and at the same time stocks coming off, the yen doing better, and things like that. The market is swinging so quickly from one to the other end. It's really accelerated.
If you really don't want to fight the Fed, Stel, I don't think that we should even be looking to buy gold and silver or the euro until the Fed comes out and says, you know what, we're pausing.
Yeah, you could argue that.
Easy?
You could argue that, but I would argue that equities have a lot more to underperform against the euro dollar and metals, in my humble opinion. So
they held up better.
Yeah, I think they will. It's difficult. I talk to so many people, friends who say, "No, we have to be buying here." Well, why? What is your trigger? You have to wait for this move to finish. You have to wait for the big picture to change. And for me, I might be wrong. For me, the big picture changes when the Fed tells us.
The problem we have is that everyone's been by the effing dip for so long. It's hard to change that mentality.
Yeah, they're looking at the old movie. They're watching reruns, and they weren't
do an S&P down to 3,000, still be buying a dip and getting caned every time.
Yep. I still think they caned.
Were you in Singapore for a little while, Ryan? Do you have post-traumatic stress from that? I would, man.
I still think, for what it's worth, I still think that probably the place where the Fed starts really noticing markets, equity markets, I mean, is the pre-COVID highs, 3,400-ish. I think they're going to step in and start changing their message a little bit. Obviously, depending on how fast we get there. If we grind, then it might be a little bit easier. But 5% down days, nobody wants to see that. That's for sure.
Okay. Oh, we have Kirk Spano today. Haven't talked to Kirk for a while.
Yeah.
So I don't know. Can you guys give me a feel for what you think oil is going to do? And let's go to euro. Okay. So I think Grega is looking for just a bear market rally. Do you think we're going to get it? I mean, after yesterday, I thought we still could do this, but after today, I don't know. So dollar still, I don't know.
The euro dollar is carving a long-term bottom. I mean, how much lower can it get? Good question, but I think here around these levels, will we get to parity? I don't think so. But for a long swing trade higher, I think we are starting to carve a really nice bottom. Famous last words, I know, but that's my opinion.
So do you get long here with stops under the low, or do you sit and wait to see if it flushes one more time?
I will personally sit and wait, and this is the reason why I'm also sitting and waiting for metals as well, because I think there is a chance we get another kind of solid risk-off move. The dollar gets bought as a reflex action. Right. Metals get smashed again as a reflex action, and then I reconsider. I think there's a high chance of that happening again.
Okay. I think the June ECB is the cruncher for what happens in euro dollar.
When is that, Brian?
6th of June,
I believe.
It's
in June.
Yeah. All right. Isn't that right around the Fed? The Fed too?
9th of June ECB, 15th of June the Fed.
Thank you, Kman.
I had my number upside down. But I think, it's because it's all going to depend on what we know. They're ending QE. We know they're going to look to hike. It's what and how they hike. That's going to be the key thing, how much they hike. And if the market gets disappointed, that's probably the last decent dip you might get in euro dollar before the Fed really get on their the ECB get on their hike path.
Yep, I don't disagree with that.
Crude's sure taking a long time. It's been going sideways since March.
The issue with crude is that people who, or the market who may think that we are going into a recession or things slow down due to China, whatever, they are countered by the OPEC not hiking, by people being extremely low on reserves and needing to buy. I think oil is a tough trade for me right here and now. Very tough.
It's an I don't know for me. So, but tight range. I guess you play the range. Closes over 116, I wouldn't be short. And closes under 94. That's a hell of a range to have a decision. But it looks like everything in between that is coin flips, unless you just have a bias. Huh?
Yeah, that's exactly what we were saying today in the flow show. When you get markets that are a bit choppy like this and prices are sitting in the middle, not knowing what to do, just pull yourself back a bit, step back, look at the wider time frames, pick your wider, stronger levels, and if need be, sit on your hands and wait for those, because you're going to have great conviction at the bigger levels than messing around in the middle sometimes.
So, Ryan, I heard that you listened to the interview from yesterday with Jean-Francois. What did you think of, the experience that he had? Really interesting.
Very honest, wasn't it?
Yeah, really.
Very honest. And that's part of what we want to do here with this program. It's not just, there you go, off, take the program, the funding program, and off you go, run away with it, we'll leave you on your own.
Yeah.
We want to know these things because that's how we can help you. That's what we're here for. But very honest. I thought it was very honest. It's good that he's given it another go.
Yeah.
It's important to
he
get
loved
back
it.
on the horse.
He loved. He enjoyed doing it, even though he didn't. He said, the invasion. That was what when markets changed that day. His ego got in the way. But I mean, he is a good trader. He'll pass it. Anyway, I don't know what else there really is to cover. If you guys are doing any crosses that are interesting, I don't do a lot of crosses.
Just want to mention the data coming up at the bottom of the hour. We've got the Philly Fed manufacturing data. It's the second piece of manufacturing after Monday's Empire State for May, which was an absolute disaster. So that's going to be watched because we're already seeing a few cracks appearing in the housing market now. You know, the Target and Walmart stuff, cracks in the retail, and potentially now we might be seeing cracks in manufacturing. So
does the UK have a housing stock shortage like we do here in the US?
Oh yeah, because we're only a small gaff. Always moaning about lack of housing.
Okay, so there's a shortage of real estate except in China. That's the only place I could go live in a ghost city and
have a block or two
there in Texas.
Where in Texas?
Anywhere. It's a big ass state. It's a big state.
I hear things have even gone up there quite a bit.
Yeah, I've being that I lived there for so many years, and real estate, when it goes up there, you got to think, man, there's really a lot of demand because property taxes are so high there. My mortgage, and I'm talking 15 years ago, my mortgage was about, or my taxes were about 2/3 of what maybe like 2/3 is probably pretty close. I'm thinking about it. No, it was about, my taxes were about half of what my actual mortgage were. So you combine those together and that's how much your property taxes are. So it's hard for real estate prices to go up in Texas relative to like where like investment is rampant, like, a Florida or Florida is not really that good of an example. I guess it is. And then like, or Arizona or California or something, Texas is, and when it goes up, when prices go up, that is true demand. And well, at least in Dallas it was. And they've seen a lot of places in Texas have seen a mass exodus from other parts of the United States into Texas. So the demand has been really high there. So anyway, good morning, everybody.
Good morning, Blake.
I was just kind of letting you guys ramble on a little bit. I wanted to talk a little bit about this conversation we were having in the markets about cryptos, and really quick, I tweeted something just a little bit ago, and I want to talk a little bit about it because I think it's a very touchy subject to people. When we looked at these, at these cryptos, and you can pull up anything. I'm going to just show you how to do this. Get rid of, if you're looking in TradingView, you got crypto, just type in any letter in the alphabet, A, so you got, APE, AXS, AD. I just start randomly pulling up any crypto and, put it on a weekly chart and just do a little bit of homework here, just grab every crypto you can find. Right. And you'll say, from the highs, we're down, 87%. Okay, great. Let's grab anything. Let's throw an A. Let's go AXS. Here we go. There's one from the highs. We'll just grab anything. That one's 90% off the highs. Okay, let's even forget that. Let's put in B. And forget Bitcoin. Actually, that's not a good example because they'll just pull up a lot of Bitcoin stuff. C. All right, so great. We're going to look at CHR. What is that? Oh, I have no freaking idea what the hell that is. But, it is still 87% off the highs. Again, this is the whole conversation about it doesn't matter what you're looking at in crypto. Everything is down 80, 90%. Some a little less, some of them a little worse. And the point I've been trying to make here is that this is 2001 all over again. And you're going to see 95% of what you're seeing here disappear eventually. It doesn't mean it won't it won't disappear like in general or like forever, because they are cryptos. It's not like it's a company that just goes out of business, because they can't make money like the internet companies. That's what happens, right? They went, but there'll be so little interest that, they're worth what, 1% of what they were worth, at some point. But the point I'm trying to make is like a lot of these cryptocurrencies are that's what is the destruction that we're seeing. And it's going to continue to happen. And you gotta just kind of let it happen. There will be, I know we've discussed this many times. There's going to be technology in the future, whether we see it now or whether it's still coming, that will emerge as the leader in the in the space, in the crypto space. So you kind of got to wait for it, whether it's Ethereum, whether it's Bitcoin, whatever it is, whatever it ends up being. And I have no idea what it will be, but I still think there's some carnage to come. But Craig in our chat room was like, well, the thing is, people just don't want governments to know. And, there's going to be this certain type of technology that, and I get that idea of the idea of like, oh, I want to have, I want to own something that, the government just doesn't know what I'm doing. And, I've got it on my own but ultimately regulation is going to come. And I'd love to hear you guys' opinion on this, because, it's like, it's going to come and, people are going to find out, and you could get pissed off all you want, but realistically, what are you going to do? And I'm not trying to be a jerk about this, but it's like, what are you going to uproot your family? Your friends, you're going to leave them forever. And you're going to uproot your family. You're going to leave your mom and dad, your brother, your sister, everybody that all your friends, and you're going to leave from, let's say London, and you're going to move to Aruba. I mean, it sounds great in theory, but 99.9% of you, that's not going to happen. Let's be real. You can complain about it all you want, but now Stelios left and went to Greece.
I did, yeah.
Yeah, and you escaped the wrath of the UK and you left for Greece because your family was there. But realistically, how many people is that going to happen? Right?
Seriously, though, we have to remember the governments always win. And the governments always want a piece of the action. So cryptos have so many advantages, but the governments will not allow them to carry on as big as they've become now. That's the thing. So I think regulation is inevitable, and this crash will be the reason why regulation comes, because there's so many people losing so much money over this.
Wait, Tony just said, I'm sorry. I agree with you, but I got to read this. Tony just says, I don't think 2022 cryptos are analogs to 2000 web because sovereigns will never give up their greatest power. Tony, it's already happened. Like I'm saying that the analogy is the same. It already happened. All the coins, pull up any coin, they've already lost 80 to 90% of their value. We've been talking about this for like a year. So what we were talking about a year ago has already happened, and it's going to continue to happen. I agree with what you're saying about sovereigns will never give up their greatest power. Yeah, they're going to make their own digital currencies, right? I mean, that's where you were going, Stelios.
That is correct. And the cryptos, the way they are, and with all the advantages that they had so far, they've made people very at ease with the concept of digital currencies. And the governments are going to take advantage now. Okay.
And Tony said the crash happened, but not the comeback. I see what you're saying. You don't think there's going to be, okay. I hear what you're saying, but and by the way, we have data coming out here in a second. I do want to pull up the Canadian dollar, because we have some Canadian like raw price material index, house price index. And I know we have Philly Fed too, but this Canadian data is like more sensitive to inflation data. Hold on, let me pull up everything. Give me 1 second. But Stelios, I guess you're right. As far as that goes, the government will want their piece, right? And they're going to make their own digital coin.
They always do.
What technology they use?
Yeah. I think the technology is amazing. We've said this so many times. Blockchain, NFTs, yes, but the application, that's a different thing. But anyway, I think there's more to go, unfortunately, for cryptos. Yeah. And one other thing that we got the data.
Go ahead.
One other very quick thing. We have to remember, even in good times, there is this thing called, I think it's called survivor bias. people concentrate on the cryptos that were doing really well, and everybody was talking about these 10 times higher, 20 times higher. There were still cryptos which were crashing to zero before. Nobody talks about them. So there was always this bias towards the success during the good times, and now obviously there's the bad times. Okay, data.
Crap, what happened there?
Let's see.
Sorry.
Jobless claims kind of roughly in line. Who cares? Housing
not really moving.
Housing Canadian is worse than expected.
Philly Fed worse than expected.
Yeah, 2.6.
Oh wow! Yeah, big drop.
Is that negative 2.6?
Employment.
I don't know. I think it's just a miss. It's 2.6, but I mean that's a hell of a miss on the forecast.
Employment is down. Prices paid is down as well. New orders is up. That's interesting, actually.
Wow. But okay. Well, we're not seeing much reaction. Stocks. I mean, the S&P is coming down just a hair. Here's the dollar CAD. It's moving up just a bit. Well, let me see what some of the Canadian data that just came out. We have the HPI, the house price index, the raw materials price index, and then also the industrial product price index all came in worse than expected out of Canada. So, that might be weighing on they're all like kind of like leading inflation indicators coming in a little worse than expected. It's very interesting, no inflation or inflation, the leading indicators, they're kind of weakening. Might keep the Canadian under pressure a little bit. So guys, we've seen stocks and I'm sorry, I didn't get a chance to say a whole lot. And Dale, I know you've got I know you have your interview coming up, but I wanted to say that, the dollar index has really not looked very good. And I'm going to just point this out. I tweeted about it last night, but some of you probably don't follow me on Twitter, which is fine. But I just want to say that I tweeted last night that the dollar just didn't act well in that 4% sell-off that we saw in equities. Equities continue to break lower today, but so does the dollar. And that's something that we should be paying attention to. Dollar yen is at lows on the day, by the way. But I think it's something we need to pay attention to, that the dollar is just not acting well as a safe haven. So
great point.
Yeah, I mean, well, one of two things is going to happen. Stocks are going to continue to sell off and the dollar might finally catch a bid, or stocks start to bounce, because maybe they're a little oversold at current levels, which I don't think that's going to be the case. I mean, we're challenging these lows. But if the stock market just bounces back to 4,100, where we were at yesterday, what happens to the dollar? Does the dollar get smoked? And that's the kind of question that's in my mind right now. But I just want to say thanks, everybody. I wanted to let you guys had such great conversation going on. I didn't want to interrupt, but I want to say thank you all for being here as always. And Dale, have a great interview.
Okay, we have Kirk Spanos, and I was thinking about your dollar comment. Perhaps with all the carnage, where the U.S. they always said was the best sturdy shirt in the neighborhood, maybe there are a few more spots on the shirt, and people want to maybe put on short sleeve shirt in other countries. So just something that might be happening is people moving away from dollar denominated assets would include equities here, right? So Kirk, great to have you back. It's been a long time. How are you? Hi, Kirk.
There you go. Can you hear me now?
Yeah, I got it. My gosh. Yeah, what a beautiful dog.
Yeah, that's I had her until January, a 13-year-old puppy. So
yeah, that's they find a
Kirk, I'm sorry, this is Blake. Hello, good morning, and thanks for joining us. I have to say I feel your pain. I had our 15-year-old dog. She passed away 3 weeks ago. So
oh man, that's horrible.
It is. She was a flat-coated retriever, family dog, the nicest dog in the world, never growled even. So I get it. I'm still in shambles right now. So anyway, good to hear from you. Good to see you.
Yeah. Likewise, it'll last a while.
Yeah, they find a corner in your heart, nothing else can touch. So I've had a few. So they were my kids. Anyway, so you have a screen anything you want to show us today, Kirk, while you're talking? I believe that the tweet you sent out last week is you were explaining why you bought the market last week. I think it was an alpha, seeking alpha article. Is that right? Did I read it correctly?
We did a really quick in and out trade. So I don't trade a lot, that our buddy Shooter does, but I bought ARK the day before it rallied 10%. So it ended up being a good day, right?
Okay.
I'm not a big market bull, that's for sure. I've been talking about getting the 50-60% cash allocation since the end of last year. And, that's serving us pretty well right now. So, yeah, I don't know if you want to talk about bear markets or the dollar or oil or all of them, but
yeah, whatever's on your radar and you think is important for people to reflect on the idea in case they're the other way.
Well, why don't we start with the dollar? Because you guys are you guys are Forex guys, right?
Yeah.
So, I've been forecasting the dollar for a very long time. And around 2012, when everybody was talking about the end of the world for the dollar and the dollar was going to collapse when it was already pretty low, I said there'd be a long-term bull market in the dollar. And relative to other currencies, mainly the whole cleanest dirty shirt argument, that's happened. When President Biden got elected, I said that would mark a local bottom in the dollar, and it has. And right now we're seeing the dollar spike on the Fed's rhetoric, which I'm in agreement with the people who don't think they're really going to go that far, because I don't think they'll need to. And I don't think they want stagflation. And I think they realize that if they really kill demand with higher rates and tighter liquidity, they're also going to kill the expansion of the supply chain that we need. So they're in between a rock and a hard place. Do you kill demand? If you do, you're hurting the supply side. So I think that they probably are just looking for a correction in the stock market, which is what they said, right? There was a quote from a Fed president, essentially was, we need the stock market to go down, and if it doesn't go down on its own, we'll make it go down. Well, that's what they're doing right now. So the dollar, I think, is probably close to a short-term top. I don't know if it can go up a little bit higher. I suppose it probably could. I've expected the dollar and the euro to get to parity for years, and it's finally starting to happen. Will it hold in the short term? Probably not. Will it hold in the long term? Probably so, because I think the point that people miss over and over and over again in their pessimism is that the United States has the strongest large economy in the world, and that won't change in our lifetimes. So the dollar is probably going to get into a new higher range as the crypto dollar or digital dollar, whatever they end up calling it, appears in the next few years. You guys, with your conversation about the normalcy of cryptocurrencies and digital currencies, I think was spot on. I think the people are used to it. But Tony here in your chat room hit it on the head. Most nations, especially the developed nations, are never going to give up using their own currency as a medium of exchange. And a point was made in your chat room that the futures contracts pretty much validated that Bitcoin is a commodity. So it's not going to be medium of exchange. It's going to be store of value. And while it was early on used to launder money out of China, now it's being used for store of wealth, store of value by the wealthy. There's about $400 million last week that went into Bitcoin, mainly from institutions and family offices. So if that doesn't validate Bitcoin to people that the really big players are buying it on the correction, I'm not really sure whatever would. But the dollar and Bitcoin, if I was looking for a medium of exchange, I want the dollar. If I want a store of value, especially across multi-generational wealth, or because I have a little bit of global transactions to make off of a big balance sheet, right? Your Teslas of the world, then I think that Bitcoin has some value there. And in emerging markets, I think you're probably going to see some emerging markets use Bitcoin as a medium of exchange. And of course, they'll soak up some of the, some of the supply, and that'll drive the price up. I had an interview with a guy named Dr. Sean Stein-Smith. He's on the crypto board in New York. He's a professor at Cornell College. And he said that Bitcoin easily goes to 100,000 this year or next year. I agree with him. And in fact, back of the napkin math, just based on institutional adoption and family offices believing in it, right? And family offices are pretty conservative on this stuff. Oh, it's hard to not see Bitcoin making a run at 500,000 sometime this decade. So, when you take a look around, oil almost seems like small potatoes sometimes.
Okay. I know you had to, I think Barron's published an article that you wrote about Ford several months ago.
Yeah.
You still like Ford?
I really like it on this pullback. Yeah. I think that it can get down to 10-ish. What is it now? 12, 13. We were buying it back in February and March and April of 2020. I had gone to CES 2020 and talked to a bunch of the automotive executives and OEM executives, and they all said one thing. They said, hey, come 2026 with the tighter mileage standards, everybody has to go EV and hybrid. It's just the way it is. So I looked around at some of the presentations, and it was pretty clear that Ford, with their Mustang Mach-E and the Lightning, the F-150 Lightning, were light years ahead on the technology compared to a lot of other companies. Their fourth industrial revolution technology at Ford is something that gets overlooked by the market, but it's huge. They're going to be able to expand into multiple lines of business. You saw them do it with the ventilators in 2020. They have different joint ventures coming that I know of, and I'm sure there's plenty that I don't know of. So the technology, coupled with the immense real estate footprint that they have, is going to allow them to do a lot of different things, especially since the automotive production, once the ICEs are phased out, that cuts what they need for auto manufacturing nearly in half. So they're going to have a lot of real estate that either they're going to fill with other businesses, or they're going to sell a lot of real estate, and it's very valuable real estate as supply chains move back to the West.
Okay, interesting. And what you have here on the screen is something we don't hear from most people. Most people do believe there is a physical oil shortage, that there was one before the Ukrainian war. And you say supply disruptions and manipulation by OPEC. Why isn't Saudi pumping more, or any help from the Middle East on increasing production?
Well, it's clear that they use it as a political tool, right? I mean, anybody who doesn't think that they use oil as a political tool, out of Saudi Arabia is just, I don't know what planet they're smoking their crack on. Saudi Arabia is as manipulative as the United States, and they know that their tool is oil. So they have used really what was a long-term price war on oil to attack American producers.
Yeah, they were successful.
Yeah, absolutely.
They took us out.
Yeah, I'm looking for the there was a ton of bankruptcies, right? So right when they flooded the market with oil in 2014-15, bankruptcies went through the roof. They leveled off a little bit. And then there was the sanctions that didn't happen in 2018 that were promised on Iran, and they went up again. And then, of course, you had COVID. So they used circumstances to, create the shortage in oil. It's not as if they can't get the oil. It would be pretty easy for them to produce another 2 million the 3 million barrels a day between them and the UAE, but they don't do it. And that's really because they want the price of oil higher. Now, you said something the last time we talked, that what about the Westerners, America and Europe, wanting the price of oil higher so they can shift over to clean energy? And I think that there is a modicum of truth to that. Like I told you last time. However, politicians like to be reelected too. So they're looking for that balance. How high can they let oil be without, hurting their election chances? And the Saudis are, how high can we let oil be without people shifting over to clean energy too fast? And I think that equilibrium price, and having just talked to the CEO of a refining company, I think is probably around 80, maybe a little bit lower, but not much lower. I think it's going to be hard to see oil crash anytime in the next decade.
Well, in that article, don't you say that there's going to be a pumping panic where all the people who are holding up production now to, inflict inflationary pain on Western countries, that they're going to be panicked and they're going to start pumping? What's going to be the catalyst for that?
So at some point, in all of these countries,
I want to know, Kirk, come on, man. I need the day, I need the hour, so I know when to click my mouse.
September 2026.
I'll forget. Will you remind me?
I'll remind you. September 2026.
I'll forget. You'll come. I told you, Dale. 2026. All right. Well,
September 2026.
Don't you think it could happen sooner with what's happening with tightening by the Fed, etc.? That it's just another asset, and I don't care where you are in the globe, your interest expense is doubled on everything.
Right.
So I mean, it's possible that it's costlier to hold inventory. Do
you really think that we're not going to see ZERP again in the next year or two?
I know guys that say that we will. I think we're going to have a correction in yields that I think began a few weeks ago.
I think central banks get looser imminently. I'd say by the end of the year.
Okay.
So I don't think that my thesis, which is shared by people like Neil Kashkarian and Neil Howe and Larry Summers, is wrong. There is a structural problem with the global economy. It has to do with aging demographics. Elon Musk talks about it now. There's no way to change it fast. It's just impossible. So the future of the global economy is slow, will be slow for a very long time, probably to the middle of the century. And as people age, you're going to have a couple of things become more reality, right? Aging is the reality of mankind. Demographics is destiny, but also part of destiny, and this is actually the title of an article, is demographics and robots are destiny. So you're going to see a lot of things change. A lot of old economy things go by the wayside because they don't have the means of production or the demand anymore. And then other things that are in this fourth industrial revolution are going to do spectacular. So you're going to have a great divergence in the economy where old finally becomes old and dies, slow morphine drip deaths. And the things that are in the fourth industrial revolution economy, the things that allow a third of the population to work from anywhere.
Yeah.
Right. That's really where we're at right now.
We've been doing it for years, Kirk. What's the big deal?
Well, you guys are ahead of your time. I've said that all along.
You were too. When's the last time you had your own office?
January of 2016.
Okay, see. So
I had an expensive, nice suburban office.
Yeah. So it didn't take a pandemic for you to not want to commute, even drive to the office anymore.
Oh man, yeah. No, the hour a day of driving was killing me.
Yeah. So it would be, especially now. What's your recession call? Yes or no?
I have said that there will be a skip straight recession. And what I mean by that is, I think for the next, well, I think it just happened. The first one just happened. But I think we probably get another negative quarter in the next year. It might be the first quarter. The first quarter is usually when we're weak. It's hard to have back-to-back negative quarters. Inventories clearly had something to do with the last quarter. All the unloading of ships. You had 2/3 of the ships finally unload in the first quarter. I don't think that the American consumer is weak enough to see a big downturn. I mean, could we have just a barely negative second quarter? I guess maybe. And then does that really qualify as a recession? Not in my book. The technical definition of recession is a substantial change in the economy, and I'm not so sure that we've quite seen that yet. But I mean, there is still a stagflation narrative out there that could happen. I talked about this back in 2018, how we were setting up for it. All these things that are manifesting now. I've got articles out there from 2018 where I was quoting Gary Cohen, talking about how we're setting up for stagflation. Could it happen? It could, right? I mean, maybe we don't get extra oil from Venezuela or Canada. Maybe Saudi Arabia decides to go, fire and brimstone on the whole global economy. I mean, I don't think that's in their interest, but I don't know. Is MBS crazy? I doubt it. So I don't think it's going to happen, but maybe he is. Who knows? I think
you have a feel for what's going to be the end game in Ukraine.
Well, I said this actually like the second day of the conflict. I said that I thought that Russia would retreat from Kiev and try to take the eastern part and have a land bridge, down to Crimea. And that's exactly what they've done. I'm surprised that it's taken so long. The Ukrainians have been just amazing at fighting back. I didn't know that it would go that way. That's for sure. I didn't know that we had been sending them so many weapons for so long. I didn't see it not being a quicker thing. So I think that ultimately Russia takes the eastern part of Ukraine. Putin declares victory. He's going to say that he disarmed Ukraine. He's going to say that he freed the people in the eastern part of the country. And, enough people in Russia will be okay with it, at least in the short run. However, he has really pissed off some of the super wealthy, and they've got power. So, we'll see if Vladimir Putin ends up real sick someday in the not too distant future. We'll see.
For a while, we were looking for things to happen in Iran. There was a little news article that they were a couple of weeks away from having a nuke. Was that fake news?
I think that they've been real close for a long time. I mean, I don't know if you can measure it in weeks at this point, but, okay. I think that they've had the technology for a while, and I'm sure that they've been doing things that they weren't supposed to. Okay. Would they ever launch a nuke, though? I think that the delivery system is what we have a better focus on, right? I mean, could they do like a dirty bomb? For sure, they could. They could have done that a long time ago. Would they ever have fire a missile, right? I don't think they have that technology and capability yet. And I think that if they were on the verge of acquiring it, we'd blow it to smithereens. So we'll see.
Okay. All right. And
I will say I do think Iran is going to produce more oil imminently. I think that there will be an Iran nuclear deal. Okay. I think that they've been on the verge of that for a while.
Well, technically, we take out 94 and measure 60. What you talk about in your interview. I mean, in your piece that you wrote. So
So I missed a little bit of that. You faded out.
If we take out the 94 support level in WTI, it measures down to 60.
Yeah, the 60 to 80 range is something that I think is coming. You guys are way better short-term traders than me.
The election.
That's always what I thought.
Yeah, that's what, to be a nice chart for Biden to show. in a commercial.
Yeah, and I don't know if it'll be in time for the midterms. Yeah, I don't know if it'll be in time for the midterms.
Okay.
All right.
I
think the Democrats have a tough road to hoe here.
Okay. And how's your poker career going?
I will be in Vegas for 2 weeks playing in the World Series of Poker, starting in a month. So
okay,
we'll see. We'll see if I'm any good anymore.
Kirk's a rounder.
A little bit. I try to get around.
It was great talking to you, bro. What's the best way for people to follow your writings and what you do every day with Scott and what you're offering nowadays?
So this article will be on the free side of Seeking Alpha today. So it'll be right up here. You just find my profile on Seeking Alpha. And then my investment letter is here, fundamentaltrends.com. And I just created a special coupon, Forex 50. So if anybody wants to try it out, you can get it for half price forever. So mainly just because I appreciate what you guys have done for me. And, I listen in whenever I can. And you guys are, I know, some of the best traders around. I really have benefited from having Shooter over in my chat room. So that's worked out pretty well. So if you're into stocks, and you can give up doing Forex 24/7, I might be somebody who have a good idea for you now and then.
Yeah, Kirk's got good insight and instincts about what's going on, can look beyond the horizon. And I want to thank you for your time today, Kirk. Always root for you guys. Good hunting the rest of the spring. And I'll just get you back into the rotation. I'll contact you on Twitter.
Sounds good.
Great to talk to you again, Kirk.
Yeah, have a good one.
All right, my trading warrior brother, Kirk Spano, at Kirk Spano on Twitter. And there's his website, fundamentaltrends.com. That's going to be a wrap, everybody. You're welcome, Ann, Alexander, and you could join the team out for the Morning Edge in 18 minutes. And thank you, Kirk, for those kind words. You owe us big time.
Yep. You have a
just
good day.
Kidding, man.
Yeah. Big time. Big time. Big lead.
Your first child, man. Yeah. Anyway, so thanks very much, Kirk, and interesting stuff today as usual.
All right, you take care.
All right, adios. That's it, everyone. Don't just count your oil barrels. All right, count your blessings. See everyone to wrap it up. Wrap it up tomorrow. Adios. See you, Mary. See you, Laura.